Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the 11th day of August 2014, and this is the daily report for gold and silver. Quiet and virtually unchanged in the gold market, currently trading off roughly $1 on the day. Current print 1308 and change, the high 1312.40, the low 1304.40. Silver, however, is showing a nice gain on the day, trading roughly 12 to 13 cents higher. Current print just above $20 or just at $20 per ounce. The low on the day 1976, the high 2021. More on silver towards the end of the show. Traders, I want to start today's show by thanking all that sent us emails wishing us good fortune as we went through a hurricane, which turned out to be, thankfully, a non-event here in Honolulu. To the market, we're looking at our daily chart, and I did do the show on Friday a little bit early, and I was talking about a candlestick that I saw forming. Basically, it is called a shooting star, and that is really what we ended up with. As I did the show, there was about 3 hours left in trading, so I wasn't sure if we were going to see this candle form or complete, let's say, as we went into the close of the market, but we certainly did get that. A shooting star is simply an inverted hammer that is found after the market has been in a defined uptrend. It's part of the umbrella group of candles, which are basically composed of 4 different candle types: the hammer and hangman, shooting star, and inverted hammer. So there are 2 candle types, and depending on whether they're found at the bottom of the market, in other words, if this candle type here was found after a defined downtrend, it is called an inverted hammer. Found after a defined uptrend, it is called a shooting star. Now, we wouldn't take that without confirmation, but it is something that we absolutely want to pay attention to, because what is interesting about this candle type is this elongated tail. The tail has got to be 2 to 3 times the length of the body size. That's the definition. You can see how long this tail is, and what it really says is the exaggerated high. So the market was taken up to a high. I believe that high was just at around 1321 or 1324, right in that area. This is 1320 right here, so it would have been well above 1320. 1324 does make sense. And we talked about the fact that 1320, 1331, and then on the top 1345, those are the levels of resistance that we're looking at. Today, what we really need to focus on, of course, is going to be our levels of support, because the market has been under pressure after hitting those highs. My sense right now, 1305 is still a pretty critical number. 1311 is a number, but we've broken through that number. I think it's an important number. And we have that psychological level of 1300, which isn't so much a fib number as much as it is a psychological, what we call one of the century marks. So for that reason, we've got a low of about 1304. As long as we're maintaining above the $1,300 mark, my sense is that we are building a base. Now, I spent some time on Friday's show talking about how we look at the major, the intermediate, and the subcounts behind that. So if we're looking at our wave 1, this of course is all a subcount of 3, wave 1, wave 2. If we're truly in 3, 3 will be again subdivided, and it will be subdivided into probably 5. So we'll get 1, 2, 3, 4, and 5. And the other thing that we'll need to see within this third wave is a couple of things. One, the rally or length is got to be at least equal to that of wave 1. Wave 1 is the rally that we had back in June. This is our $100 rally. So when we consider that the market is really beginning from this low right in here at about 1280, we would look for the market to go to about 1380. In other words, we would look for about a $100 move on this particular run, or this wave 3. Again, wave 3 is a subcount, and within that we're going to get our series of 5 waves. So the fact that we've got the market retracing a little bit doesn't concern me a lot. as long as it maintains and holds certain real critical areas. And as I said, the critical area is 1300, then below it is 1292. I don't see 1292 as getting breached, but first we've got to hold 1300. As of yet, we've held it, and we've held it quite nice. As I said, the low being roughly 1304 on the day. So although we see the market in gold trading quietly and trading in essence unchanged to down $1 on the day, there are a couple of things that we can see that I feel are noteworthy. First of all, we're looking at our daily chart, and this daily chart, of course, is in Japanese average format with a simple moving average, 14-day on our daily chart. 1298 is that average. We're trading well above that average. We note that. The second thing that we note is we still are on the Japanese average charts looking at green candles. However, you can see that the body size has been dramatically reduced in today's candle, and that's telling us that any real upside momentum that we've had most recently since the market has bounced off of 1280, at least for the present, at least for the time being, is waning a little bit. So the fact of the matter is that we could see the market move and backfill a little bit prior to moving back up. I am still looking for higher pricing in gold. However, it wouldn't surprise me if the market retraced a little bit, corrected a little bit before moving back to its upward momentum and really finishing this rally that began at 1280. The other key that we really want to look at, this of course is our a 2-day standard candlestick chart, but what's important on this chart, of course, is the Andrews pitchfork. We've identified the fact that we literally have a difference, and the difference that we're seeing is the fact that for the first time in really a year and a half, we have broken out of this downward channel that has been prevalent in the market. We had this happen once during that $200 rally we saw end of last year, beginning of this year, and then the second one that moved off of this low starting in June at 1240. The other thing that I believe is absolutely noteworthy, and I guess the easiest way to look at it is going to be to pull back a daily chart. 1 second, let me get. And all I've done is pulled our daily chart back up, but I've compressed it so we can look at the most recent lows. Because over the weekend, as I looked at the market and looked at what we've genuinely saw, the one thing that is unique and is different than what we have been experiencing recently as this market fell out of bed and virtually has been trading lower is take a look at these most recent lows. This is our double bottom, 1180. The second bottom, 1240. This third bottom, 1280. For the first time in over a year and a half, are we starting to see a real market moving up? And a market moving up is one in which, as it moves back down, it has to have a higher low. Moves back up, you're going to get the corrections, but again, you have to have that higher low. So we've got a series of higher lows starting from the bottom, which was 1180, that second bottom. And right now, even though we're looking at a market under pressure, a market down $1 on the day, the key to me is the fact that when we look at the recent activity, we have had a succession of higher lows. And that really, on a technical basis, is what we look for as a market moves to higher ground. So traders, what about silver? Obviously, we're waiting for some confirmation. This is a good note for silver bulls out there. It does appear as though we've got some support at this 61% retracement, call it 1980 on the charts. However, at the same time, the market's had some real resistance at 2013. That's the 50% retracement. Look at these most recent highs up here for the last 3 trading days. Even with higher pricing, what you can see is each and every day this market has genuinely traded, call it to $20.15. It has genuinely hit a brick wall of resistance and moved back down. So even with this higher day today, I am still recommending to our traders that you remain, for trading purposes, flat in silver. In terms of physical purchase and accumulation, that's a whole other story, and we'll talk about that a little bit this week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.